Hello, good morning, Assalamu alaikum. It's your boy Mohammed Yusuf. So, I'm here to give or show you how I traded Euro USD this morning. So, it's 9:37 here in Nigeria. And before I begin to give how I traded Euro USD this morning, please kindly subscribe to my channel and also like and share the video to your friends and families. Thank you. So as I said in my past video, my routine is I normally wake up by 5:30 to 5 o'clock, 5:30 a.m. to 5 o'clock Nigerian time to say my prayers. And then after making my prayers, I head off to the chat. So when I came to my chat this morning, I actually marked out my Asian range. That is the Asian high, the Asian low, and also the Asian close. Because I zoom out to the 30-minute time frame to see the Asian range very, very clear. So after marking the Asian range, as you all know, I said in my past video, this red zone is the Asian range. That is the Asian kill zone. You can call it Asian session or Asian kill zone, anyone you like. So as soon as I marked my Asian range, as I said also in my past video, this FC you are seeing is the Friday close. That is last week close. As I said, the open, high, close, and low of a candle act as support and resistance for me. So it has a way which you can use it to trade, which I'll be showing you guys here in this video. So as I was saying, after I finished marking my Asian range, I switched down to the 1 hour time frame, and I saw that there is a 1 hour low here, which I marked, which I am supposed to mark. I marked it out. So actually, today's trade was all about patience. It was all about patience. So if I wasn't patient today, I wouldn't have gotten this setup. So after marking all these point of interest, I saw that price during Asian session, price had shift structure after making a move up before Asian session. Price broke shift structure by confirming we are bearish. So I thought that I had two things in my mind this morning when I was marking my point of interest, and also analyzing the chart. I said to myself, if price broke shift structure during Asian session, we normally anticipate a continuation, but you won't just have this strict rule of saying, oh, I'm only going to take the continuation. You also think otherwise, maybe you think otherwise by saying to yourself, or by knowing that you think objectively, by knowing that reversal might happen. So when I was making the analysis, I thought that, okay, price will actually continue selling to the downside. But actually, it did the latter. So what actually happened was after marking out all my point of interest, then I actually waited for the Asian low or Asian high to be swept. So around what time? Around 7 o'clock a.m. It was when Asian low was swept. As you can see, the draw on liquidity, that is the grab in liquidity. As you all know, I normally use the dollar index in getting my confidence in trading any pair correlated with the USD, like Euro USD, GBP USD, and USD CAD and the likes. So it gives me more confidence and confirmation on a trade, whether I should take that trade or not. So as I was saying, price came to, let me use the brush. Price came to grab liquidity on the Asian low. So I was checking it through the 15-minute chart, and I saw that after price swept the Asian low, it came directly, because liquidity is what drives this market. Liquidity is just like petrol, in the sense that if you don't have petrol in your car, for example, your car cannot move. So liquidity is what drives this market to move up or down, up or down, up or down. That means creating higher lows or lower highs. That's it. Something like this. Let me show you. As price is going up, price is taking liquidity. That is it. Let me show you something. As price is going, it's creating an uptrend like this. It's creating liquidity. All these lows is creating liquidity, and you can see it is all these highs here are liquidity too, which is taking it out. And there are two types of liquidity. There are two types of liquidity: the buy and sell side liquidity, which is called the highs and low, and then the fair value gaps. But back to what I was saying. I saw that as soon as price came for the Asian low, it came for this 1 hour low. I don't know what's happening with the network. It came for this 1 hour low. Price came for this. Price came for this 1 hour low. Since price is always after liquidity, no matter what, price is also always after liquidity. So I immediately just switched to my 5-minute time frame. 5-minute time frame. I switched to my 5-minute time frame, and I saw this. As I said, price is always after two things: area of inefficient price action or fair value gap. You can call it imbalance, inefficiency, or fair value gap. So I saw this 5-minute fair value gap here. But before I saw that 5-minute fair value gap, as you all know, I normally take the 1 minute. 1 minute, I just love trading the 1 minute, because it's one of my best time frame, which I like. But if you don't know what you're doing, it can wreck you. So I saw that, as I said, price is fractal. In my past video, you guys should recall that I said price is fractal. Anything that is happening on the 1 minute time frame is happening on the 5-minute, 3-minute. I saw that price made a market structure shift here. That is shift structure, showing us that we are bearish in the market. We are bullish. Sorry for the statement. We are bullish. So as I saw that market structure shift, I checked the 5-minute time frame to see maybe there is a higher time frame, maybe point of interest, which will serve as my entry model. And then I saw this fair value gap. And you all know, any point of interest, as we all know, or as I was taught, any point of interest that is on the higher time frame and the higher time frame is more stronger than any point of interest that is on the lower time frame. So this entry model, this fair value gap that is on the higher time frame, it's stronger than any point of interest that I can see on the, or any entry model, you can call it point of interest or entry model, that you can see on the 1 minute time frame. So if you are to abide with you have to follow the 1 minute time frame point of interest, you should have followed this. Sorry, the network is a little bit bad. So you should have followed maybe this last down move, that is an order block. Let me draw it out. This order block here, but you can see price didn't come for it because there is a higher time frame point of interest entry model there, which is the 5 minute time frame fair value gap. So as I saw the 5 minute time frame fair value gap, I waited for price let me find out the path. I waited for price to fill the fair value gap. So as soon as price was inside, as soon as price was inside this fair value gap, I just immediately switched to the Euro USD chart. So actually on Euro USD, I actually marked out my point of interest, that is the Asian range, and then after marking out the Asian range on Euro USD, I marked out the 4 hour highs and the 4 hour high. As I said, highs and lows are areas of support and resistance, but there is a technique in which you use them. You don't use them you don't just use them recklessly or anyhow. You use them with a certain technique in a certain way. It actually works. So after marking out the Asian range, I marked out the Asian, and I marked out the 4 hour highs. The 4 hour high. This is a 4 hour high here. This is a 1 hour high too, which I marked, and this is a 4 hour high here too. So I marked those out. So after marking them out, I switched down to the 15 minutes to see what's happening. So on the 15 minutes, when I was looking at my chart on the 15 minutes, I saw that okay, price has grabbed liquidity here. And it swept the 1 hour high, the 4 hour high, and the Asian high. I said to myself, okay. So I immediately just switched down to the 5 minute time frame. And I saw that there was this candlestick pattern which we call the evening star. If you can check, if you have read the candlestick Bible, you should know about this type of candlestick called the evening star. First was a bullish candle. Second was a pin bar. You can call it pin bar. That is a pin bar. Second, third candle, which is the confirmation candle, was a bearish candle. Then price moved to the downside. So after price moving to the downside, I saw that price actually left an area of imbalance. That is this 5 minute fair value gap. So before even seeing that 5 minute fair value gap, I was on the 1 minute time frame looking for a market structure shift. As you all know, price is fractal. You can see on the 1 minute there is a market structure shift here. On the 1 minute time frame, there is a market structure shift here. You can see the market structure shift. So as I saw the market structure shift, then I switched down to the 5 minutes, and I saw there is a 5 minute time frame fair value gap. So I actually already knew that price will definitely come back for this 5-minute fair value gap and then continue to the downside. So after marking out the 5-minute fair value gap, you can see my entry. You can see where I placed my entry. My entry was at the fair value gap, this place, and then you can see my invalidation point was this high, but I normally add 1 pip to the initial stop loss, making it to the initial stop loss, making the stop loss 13.0 pip. So actually this trade was a 3.09 risk to reward trade. Actually, you guys know that my risk to reward model is 3RR. Anything about 3R, anything apart 3RR, I don't normally take it. So TP1, I target 2RR, which actually was smashed. It was price hit TP1 first, that is this level, then TP2, which was 3RR. But you can see price actually gives you more at times. See, price gave about 4.47R, but I don't care. I actually have gotten what I wanted from the market. So that's it for today and for today's trade. So before I end the video, please, before this video end, please kindly subscribe to my channel and also like and share to your friends and families so that they can learn how to make a proper analysis on any pair. They can learn how to trade and make analysis on any pair, any forex pair of their choice. Thank you and have a nice day. See you next time. Bye.